Bitcoin has rallied as much as 4.75% this week, rising to $113,384 from $109,250. Stablecoin inflows into exchanges increased over $2 billion. So what's really driving the surge, and could it be the start of Bitcoin's next big move? Let's break it down. Bitcoin has rallied as much as 4.75% this week, rising to $113,384 from $109,250, showing its bullish momentum into the U.S. Nonfarm Payrolls release on Friday. The data came in significantly weaker than expected, with only 22,000 jobs added in August versus forecasts of 75,000 and July's 73,000 print. The unemployment rate ticked up to 4.3%, in line with expectations, but higher than July's 4.2%, while wage growth slowed to 3.7% year-over-year from 3.9%. For risk assets like Bitcoin, weaker labor market data strengthens the case for Federal Reserve rate cuts. With Fed cut odds at 88.2%, the report highlights cooling inflationary pressures, increasing the likelihood of liquidity injections. Lower rates and dollar weakness typically act as bullish for crypto markets. On-chain data signals show that the market was preparing for this outcome a day prior. Stablecoin inflows into exchanges increased over $2 billion. Historically, such activity reflects dry powder ready to rotate into BTC and ETH once a catalyst emerges. At the same time, Bitcoin's open interest has climbed above $80 billion, near all-time highs, despite price consolidation around $110,000, a sign that leverage positions are building. The combination of easing macroeconomic pressure and bullish on-chain positioning sets the stage for volatility. Structural bias remains bullish. With liquidity primed and sentiment shifting risk on, Bitcoin may be preparing for another all-time high. Following the weaker-than-expected NFP print, Bitcoin initially tracked higher but quickly reversed, sliding 1.5% after New York session open. The drop pushed BTC back below $111,000 after retesting the key supply zone between $112,500 and $113,650. These pullbacks are often caused by the early long liquidations, with over $63 million erased in the last 4 hours, alongside potential stop hunting by market makers capitalizing on crowded positioning before resetting trend direction. On the 1-hour chart, the structure remains constructive. Despite the setback, Bitcoin continues to carve out higher highs and higher lows, a classic sign of an uptrend. Unless BTC decisively closes below $109,500, the short-term bullish structure holds, with a dip looking more like a liquidity sweep than a genuine trend shift. Zooming out, the higher time frames tell a more cautious story. With 2 days left before the weekly close, it is premature to call a confirmed bottom. A decisive close above $112,500 would meaningfully strengthen the case that a base has formed near $107,500. Until then, the broader market remains in a transitional phase, balancing between macro-driven optimism and local supply pressures. In short, the lower time frame bias remains bullish, but confirmation of a durable bottom rests on the weekly close holding above resistance. Thank you so much for watching. If you found this video helpful, please don't forget to like, share with your friends, and subscribe to the channel. Your support really means a lot. See you in the next one.